How to protect your savings against inflation in 2025. Inflation has become an unavoidable part of our financial reality. And as we head into 2025, the question on everyone's mind is, how can you protect your hard-earned savings? Inflation reduces the value of cash and conventional savings accounts by eroding purchasing power. The worth of your money is essentially decreasing daily if your savings aren't keeping up with the growing expense of living. Now is the time to put a solid plan into action so you don't fall behind. Maintaining financial stability requires protecting your assets from inflation, whether you're getting close to retirement or creating a nest egg for the future. From using inflation-protected securities and diversifying your investments to leveraging alternative assets and high-yield accounts, we'll go over 7 practical ways to protect your finances in this video. You can protect your wealth and position it for growth in spite of economic instability by using these methods to help you weather the inflation storm. The moment to take action and make wise decisions that will maintain your financial stability is now. Let's explore the best strategies for protecting your investments and ensuring the stability of your finances in 2025. 1. Make sure your investment portfolio is diversified. Your money loses purchasing power due to inflation. Thus, diversity is an essential protection. Spreading your investments across several asset classes is a better option than depending only on cash or conventional savings accounts. Commodities such as gold and silver, stocks, bonds, and real estate all frequently react differently to inflationary pressures, letting you balance risks and rewards. Including assets that often do well during inflationary times is a smart move for 2025. Stocks and industries that can pass on rising costs to customers, such as energy, healthcare, and consumer staples, typically hold their value. Income from real estate investments, especially rental properties, can keep up with inflation. Because of their propensity to appreciate in value when the dollar declines, commodities like gold are frequently viewed as an inflation hedge. In addition to safeguarding your savings, diversifying puts you in a position to profit from various economic climates. 2. Purchase securities. Protected by inflation. Treasury. Inflation-protected securities. TIPS are a great way to protect your money. TIPS are government bonds created especially to stay up with inflation. In contrast to conventional bonds, TIPS's principal rises in tandem with inflation, as determined by the Consumer Price Index (CPI). Assuring that inflation doesn't reduce your investment, you get either the adjusted or original principal when the bond expires, whichever is larger. A portion of your fixed income portfolio should be allocated to TIPS if you're getting ready for inflationary pressures in 2025. They provide a risk-free and secure option to earn interest while keeping your original investment's value. Additionally, take into account Series 1 savings bonds, which are another type of government-issued bond intended to guard against inflation. If you're searching for a safe, long-term investment, these bonds can be a terrific complement to your plan because they offer yield that adjusts with inflation. 3. Expand your contact with actual assets. During times of inflation, real assets like infrastructure, natural resources, and real estate typically maintain or even grow in value. Because real estate is a great hedge, and property values and rental income usually increase in tandem with inflation, it is especially advantageous. Inflation-linked revenue sources are frequently found in infrastructure investments, such as utilities and toll roads, which promote stability and expansion. Real estate investment trusts (REITs) or direct real estate investments are 2 ways to increase your exposure to real assets in 2025. You can invest in a diverse portfolio of real estate properties through REITs without having to handle the management yourself. A hedge against inflation can also be obtained by investing in natural resources like minerals, oil, and gas. Since these commodities often increase in value when prices rise, you can potentially profit from inflationary gains in addition to safeguarding your funds by holding real assets. 4. Pay attention to stocks that pay dividends. Investing in dividend-paying companies can be a great method to safeguard your money against inflation and earn income. Consistent and increasing dividend payers are frequently reputable and financially secure, which makes them a safer option in unpredictable economic times. In addition to offering a consistent income stream that can help counteract the effects of inflation, dividends can also be reinvested to increase the compounding growth of your investment. To be ready for inflation in 2025, seek out businesses that have a solid track record of increasing their dividends, especially those in defensive industries like healthcare, consumer staples, and utilities. These businesses are usually able to pass on growing costs to customers since they have pricing power. You should also think about investing in mutual funds or exchange-traded funds ETFs that specialize on dividends in order to diversify your holdings over a number of dividend-paying stocks. In addition to protecting your purchasing power, this technique offers a steady source of income, even in times of inflation. 5. Think about other investments. Because alternative investments have no link to more conventional asset classes like stocks and bonds, they can provide protection against inflation. Examples of these include commodities, hedge funds, and private equity. Due to their independence from the performance of the public markets, these assets frequently do well during times of inflation. If you want to protect your assets in 2025, think about putting some of your money into alternative investments. The techniques employed by hedge funds, for example, can benefit from market volatility, and commodities such as gold and oil frequently appreciate in value in tandem with inflation. Additionally, since these companies can modify their prices to keep up with rising expenses, private equity investments in firms with great pricing power can act as a hedge. Even while alternative investments could be riskier, they can help you diversify your investments and keep your money in an inflationary economy. 6. Keep emergency funds in high-yield savings accounts. Although investing is essential, having emergency funds on hand is as vital. But during periods of high inflation, your emergency fund might not be enough if you leave it in a standard savings account, since the interest you earn might not be enough to keep up with the rising costs. Better returns can be obtained by looking at money market or high-yield savings accounts instead. In 2025, search for online credit unions or banks that offer competitive savings interest rates. High-yield accounts let you keep more of your purchasing power by offering rates that are generally higher than the national average. A portion of your cash reserve should also be invested in certificates of deposit CDs, with interest rates linked to inflation. This strategy guarantees that your emergency fund will continue to be liquid and generate a return that at least partially compensates for inflation. By selecting high-yield options, you may keep your funds available for unforeseen costs while lowering the chance of losing purchasing power. 7. Keep yourself updated and modify your approach as necessary. Since the economy and inflation can shift quickly, it's critical to keep up to date and modify your plan as necessary. By keeping an eye on important economic indicators, such as the Consumer Price Index (CPI), interest rates, and Federal Reserve pronouncements, you may predict shifts and make financial adjustments. For 2025, think about collaborating with a financial advisor who can offer analysis of inflation patterns and suggest portfolio modifications. A diverse portfolio can be maintained by routinely assessing and adjusting your investments to make sure you're not unduly exposed to any one asset class. Additionally, monitor any changes in government spending or policy that may affect inflation, such as prospective increases in interest rates. You may maximize inflationary periods and efficiently safeguard your savings by remaining adaptable and proactive. In conclusion, protecting your savings is more important than ever at a time of rising inflation. Maintaining your purchasing power as 2025 draws near will require taking a proactive approach. Increasing your exposure to real assets, diversifying your investments, and investigating inflation-protected securities can all offer a strong basis. Furthermore, investing in alternative assets and dividend-paying equities provides opportunities for growth even during uncertain times. Making sure your emergency fund is in a high-yield account also keeps your money accessible and helps you combat the consequences of inflation. Last but not least, keeping up with economic developments enables you to modify your plan as necessary. You can safeguard your wealth, preserve your financial stability, and keep ahead of inflation by putting these 7 strategies into practice. Whether you are a novice or an experienced investor, following these measures will enable you to confidently handle the difficulties posed by inflation. By acting now, you will protect your savings and set yourself up for future financial success. To protect the value of your hard-earned money, keep in mind that your best defense is a solid financial strategy that can withstand inflation. Let us know in the comments what you think about the How to Protect Your Savings Against Inflation in 2025, and don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.